Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and today we are going to be thinking about what we've got on the slate for us heading into the end of August and this new OPEX period, right? It's going to be an exciting few weeks ahead of us, thinking about Q2 earnings coming up, as well as some potential rate cuts a couple days before September OPEX comes to fruition. That's coming up. We're thinking about what some of the impact on that might be, especially on the early side of this OPEX period today. So that's coming up. But before we get started, in honor of our YouTube departed friend and GameStop hero, Richard Newton, we are actually going to be going to a Bible verse today. That's what we're starting today off with before we get into our gratitude. So today I've selected for us an excerpt from the minor prophet Haggai. Haggai 2:6-9, and it says, "For thus saith the Lord of hosts, yet once again it is a little while, and I will shake the heavens and the earth and the sea and the dry land, and I will shake all nations, and the desire of all nations shall come, and I will fill this house with glory, saith the Lord of hosts. The silver is mine, and the gold is mine, saith the Lord of hosts. The glory of this latter house shall be greater than of the former, saith the Lord of hosts. And in this place I will give peace, saith the Lord of hosts." So with to sort of start this out and sort of my approach to thinking about scripture, and especially about something of this prophetic genre, is to understand, right, of course, both there is a historical context, but something of a more general and a more archetypal nature to literature and to prophecy of this kind. So obviously, right, in the historical context of this scripture here, we have a Hebrew prophet talking about the revival of the house of Israel, right? Of course, in this time of Babylonian captivity, that is in the Persian Empire, the Neo-Babylonian Empire. But of course, more generally, right, I think on what some of is contained here, and I am forced to think about the relationship of GameStop, right? Of what will come as a product of what is going on with GameStop. And that is that ultimately, right, no matter what machinations mankind can put together to attempt to tilt this or that system in our favor, right? Whatever, let's say, those who establish great potentates, principalities, if it's kingdoms, if it's, say, what's going on, right, with Wall Street in the case of GameStop, what various corrupt institutions have done in order to manipulate the socioeconomic fabric, not only of the United States, but of the world in their own service through these loopholes, let's say, in the structure of the game. No matter how corrupt, no matter how backward, no matter how dysfunctional it gets, right, ultimately, if mankind insists on maintaining a dysfunctional system, the Lord will shake things, right? The very fabric of creation, of reality, the matrix of being itself will bring this ill-begotten structure by the hand of man to its knees, right? And sort of this is reflected here as well, of course, with this notion that the silver is mine and the gold is mine, says the Lord. Everything of value arises from the laws of nature and of creation itself. And ultimately, no matter what mankind does in order to tilt those advantages in his favor for a short time, in our favor for a short time, if the structure of being, if the matrix of being and the laws of creation reject that, inevitably things will snap back into the way that nature and creation demand it. So that's what I'm thinking. That's something that certainly inspired me and inspires me to think about some of the broader implications of the GameStop saga here. So let's hop into our newsletter breakdown for today. We will start with our breakdown as we always do, and that is with our gratitude. And today's gratitude goes out to, once again, to Robert DeWerf for sponsoring today's newsletter and video breakdown, as well as to our monthly supporters, Not Medical Advice, Master Kurt Lusko, Cosmotropic, to Swag52, and Hey Luckies, aka Faithless Looter. Thank you, everyone who has supported the channel thus far. Thanks everyone for, we had a wonderful live stream on Friday. Definitely go check that out if you didn't have a chance. We got some great questions You know, great things pointed my way. Some folks pointed out maybe some modifications I can make to some of my brokerage fees. So this is, you know, it will likely be incredibly helpful going forward. Many excellent things. If you think you can benefit from that, definitely go check out the recording on Friday if you didn't have a chance to yet. Yeah, really looking to this week's live stream as well. Of course, every Fridays at 4 p.m. And yeah, looking forward to hearing from you guys in general on a regular basis. So thank you very much. Yeah. So yeah, I was thinking as well, like kind of meme wise today, how would I maybe frame this in terms of an image? What's sort of the next thing on the horizon for us? And I was reminded of Roaring Kitty's meme sequence, and certainly this sort of notion of the dog days of summer. Of course, the dog days of summer are a period of time that stretch in sort of late summer. And this showed up in Roaring Kitty's meme sequence, and a lot of folks suspected it may have something to do with GameStop price action, right? Following all of this excitement in May and June, that, you know, we would kind of slip down, but then once the dog days are over, we would start moving back to the upside. And that largely remained true in the grand scheme of how 2024 ended up playing out. But I would say, right, if you sort of go back, right, in general, July, August are not super exciting months for GameStop, right? Volatility gets very low, certainly going into the sneeze back in 2021 and 2019, 2020, right? Just nothing. There's this kind of famous video from the old Roaring Kitty live streams going like, you know, June, nothing. July, nothing. August, little something, nothing, right? And so I was thinking a lot about this, and I was like, you know, we're probably into a similar stretch here ahead of us, and this year's dog days by the stars end on August 23rd. And so by and large, I think what we're looking here, and I did say something like this, worked through some of this with the folks on the live stream on Friday. You know, I think we probably have one more pretty low volatility week before we start to see some more notable volatility increase and possible price improvement. It might actually be a little longer than that. I'm not really expecting it much outside of 2 weeks before earnings, but we have that to look forward to. But that being said, sort of my outlook trading wise going into this week and probably going into a bit of the following week is going to be kind of more of what we've expected. More of what we've seen toward and throughout most of the August OPEX period. So I'll point out some things that are influencing my thought process there. First, I will point out that in terms of institutional ownership, I think we're up over about 208 million shares owned institutionally, not including potential future convertible debt conversion. What this says is that we have currently, just based off the current float and current share ownership, officially by institutions, about 45% institutional ownership. If we put in the convertible bonds and treat those and their future dilution and how that'll both modify the number of shares outstanding and how many shares are owned by institutions, that number goes up to about 60%. So that's basically the range that you're looking at when you're expecting, say, a healthy company that Wall Street, that major institutions are looking to profit off of, that is, say, a mid-cap equity, you're looking at about 45 to 60% institutional ownership, and that's what we've got there. If you're not including convertible bonds, then you're at 45%. If you do include that in your institutional ownership calculation, then we're at 60%. So that's certainly very good, right? I mean, that certainly is suggestive of Wall Street looking to go ahead, major institutions looking to potentially profit off of price improvement in the company going forward in one way or another. So what I will say is, if we take a look at our technicals, however, right, we can understand, right, that, okay, this was up to June 30th. So that means that this period here is when companies actually went ahead, when institutions went ahead and built their positions between March 31st, which is right about here. Yeah, I think it's this green day right here. Maybe this red one. So here's March 31st. And then June 30th, which is right about here. So yeah, so really somewhere in here is when institutions decided to add. And what I think, right, is this period, this is a convenient period, and we talked about this last week. This is a convenient period, this very, very flat period, this low volatility period is where all the orders basically from this period could get processed, right? Could get exchanged via dark pool orders. And then whoever is responsible for market making these orders can then, by allowable rules, DTCC rules, because they're engaged in bona fide, bona fide market making activity, they can then delay the settlement of these trades till much later. These go sit basically, ad infinitum in an obligations warehouse, and thereafter, right, can be settled or are settled. Ideally prior to those obligations getting priced up because of price improvement in the underlying security. So we have seen some measures come in to kind of control the price, keep it down, keep it around this kind of 2x cash value, which is very close to Morningstar fair value for the stock. Morningstar fair value, I think, is around 23.50. So, and that's prior to the second convertible bond offering. We didn't go lower this cycle or this semi cycle than 21.93, right? So yeah, following the second convertible bond offering, 21.92. So yeah, so this period has likely been a period engineered for the gradual, say, further accumulation potentially, but also the settling of trades that were made during this very high volatility period and this rapid price up period, right? So any trades that were made in here can then be settled in this period at profit, say, to the market maker, right, who took a trade back here and then was effectively short, but not borrowing any shares of the underlying security. So recently, some of that may be coming to a head, especially insofar as major ETF, GME containing ETFs such as GMEU and XRT have been on Reg Show for a number of days now, for more than 2 weeks. And we've seen also a fair number of fails, especially most recently on IWM back in the middle of July, over 11 million fails, which is the highest ever all time by a margin of about 3 million. So very interesting. So what I would say from our technicals here is I'd like to call our attention to our PMO down at the bottom. And I would say, right, we've been tracking this. It's looking bullish, right? If we look back, basically since, late June, despite what we've seen in terms of, say, this depression here in mid-July, momentum has been shifting bullish, right? So this is gradual accumulation. This has been net bullish. Over time, momentum has been shifting in a bullish direction in the shorter term. So we can see this as we see the values in the PMO 20 average, the PMO 35 average have been moving up. And currently, we're in a position where the 20-day PMO moving average is ahead of the 35, has crossed above it. That is a bullish sign. And we are moving fast towards the 55-day moving average. So when that cross happens, we can see this historically. We have seen this historically, right? So back here in April, when we got one of these crosses, big upward volatility, very exciting price improvement. We can even take a look at historicals a little bit here. If we bounce over to our daily chart here, right, we can see these events. So, right, bullish event back here in April, then right here around National Cat Day, and then, of course, Roaring Kitty's return. So when we get these moves, when we get these crosses, we see pretty dramatic price improvement, right? So then November 2023 was the time prior to that we saw a bullish cross. We almost got one around March earnings of 2024, and then that got knocked down, and then that basically set up Roaring Kitty there for the slam dunk. So we're getting pretty close to pretty close to another one of those. But we likely have, I would estimate, about 2 weeks before we see that, and that should line up nicely, because that will land squarely within the customary, right, the historic 2-week IV appreciation lead up to the quarterly earnings reports of quarters 1, 2, and 3. You'll remember that last year this occurred about 2 weeks prior to each of our earnings periods. Slowly, IVs started to build up, both in our 10-day implied volatility, our 10-day average, and in our instantaneous daily averages over at, say, Schwab Composite using 2 different metrics. We're getting close, but it's still going to take a little time, I think. And I think we're probably just about 2 weeks out, maybe about 10 trading days, maybe fewer, maybe 8, when we start to see a little bit of that volatility. So a little bit of that price improvement. So still waiting on that. But in the meantime, I think institutions are likely to, take to squeeze as much profit as they can out of a flattening options market. And in fact, if we go ahead and look at our options data, what we do see is some big bid skewed positions with OI position shifts into this week. So really at this tight cluster of quite a lot of volume there, right? Throughout the day, we saw big position changes all skewed towards the bid. So although they're happening at strikes that are, relatively neutral, this is not stuff that's happening, say, in the money. So it's quite neutral on price action. It is short on volatility, and it does assume that yes, indeed, we will continue to kind of grind, we'll continue to kind of flatten out, and traders have been pretty aggressive going into the last Friday's trading. With that, and we can see even some really big trades coming in. For example, this QCT for 5,700 contracts. These are $30 calls. I mean, this isn't immediate. We did have stuff in the immediate term. The sort of longer term stuff here is a little bit less helpful for trying to figure out what that's going to look like over the next week or 2 weeks. Really, of course, the more proximal OI data is much more helpful in that regard. But we did also get this big QCT trade, 5,700 short contracts, which are offset by a simultaneous buy order. So they're delta hedged. Max pain is back down to 2250 from 23, right? So we've seen this. It's like going into Friday, the following week's max pain is 23, where the current week's max pain is 2250. And then after Friday's gamma gets wiped, then the following week, once OI is rolled, it bumps back down to 2250. So we saw that happen again. And if we take a look at our gamma exposure here, it largely tells the story as well that what we can expect this week is trading in this 23, like slightly below or within this 23 to 24, basically triple level composite call wall. So this tells us, right, so these are mostly short calls. So this is going to be resistant in terms of the delta hedging of the position. So as we move in here, right, the delta value on this is going to spike because the options market maker is short these contracts. The options market maker is long these contracts. There's going to be positive delta on their books, which they're going to hedge by shorting or selling shares. As we move into this area, it's going to have this very resistant texture. It's going to stifle volatility. And I would say it is very unlikely during this week that we really move outside of that range. I would say the most likely bullish case for the week is that basically right off the bat, we kind of pop up just a little bit into here, and then we kind of grind around in the 23 to 24 area, and then kind of settle down towards the lower mid part of this range towards the end of the week. We'll see, obviously, but I think that's most likely scenario. And we'll see. Obviously, we have to see, but I think that's likely going to be the case. I think most advantages would probably come from doing that a little bit earlier in the week, kind of doing that pop earlier, shoots up hedging volume a bit, right, kind of on the early side. Then IV can go up with it. Then institutions can continue to go ahead, sell very high numbers. Traders can sell very high numbers of short calls, and then watch those continue to lose value and expire worthless into the end of the week. So that is, that's the idea there. That is my outlook going into this trading week. We'll have to see, of course, what that's going to look like towards the end of the week heading into next week. For the meantime, that's basically my outlook. But I do think right within the next couple of weeks, we're going to see something of a shift in the character of what we've seen going into Q2 earnings, which I think will look quite nice. That's what I think institutions are setting up for. Good luck out there with your trades. Stay sharp always. You never know what's going to happen. Something might surprise us. All those institutional forms, order forms are in, right? The 13Fs are in. So we'll really have to see what develops for us. Never rule out the possibility of anything happening with respect to GameStop. It'll surprise you. So yeah, so that's looking forward to seeing you guys later this week, of course. We'll see you for tomorrow's video. Thank you very much, as always, for watching and listening. And yeah, let's go GameStop. Take care now.